Good evening all. On behalf of WRC of ICI, I welcome all of you for today's webinar on media and entertainment industry, that is a GST sectoral series that WRC is conducting. And today's special occasion that we will be releasing our book also. So I welcome on this occasion our WRC Chairman Murtuza Bhai, our immediate past Chairman of WRC Manish Bhai, CA Pratik Sampat, the faculty for today's session, CA Aman Haria and Advocate Vinay Jain, who are the contributors for this publication, CA Rajiv Luthia, CA Vikram Mehta, CA Jinit Shah, the coordinators, and CA Ashita Shah, the coordinator for today's session, and all the participants to this today's webinar. Before going forward, I request all of you to please place your hand on your chest for our institute's motto song.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you all. Friends, as all of us know that GST is evolving in India, and the issues pertaining to each sector are very specific issues. The nitty-gritties are different, and in this scenario, it becomes important as a GST practitioner or the tax law practitioner for us as CAs to understand the issues of specific industry in detail. And for that purpose only, WRC has organized this sectoral series, and we are getting very good response in terms of participation as well. So one such session on a sectoral series is today related to media and entertainment industry. And we have the faculty for the same, CA Pratik Sampat over here. And as I said earlier, we will also be releasing one publication of WRC on today's occasion. We keep on releasing various publications on GST for the benefit of members, and we are really thankful for all the contributors for their hard work in this endeavor. So I now request our WRC chairman, CA Murtuza Bhai, to please guide our participants. Before that, just to mention, our past chairman of WRC, Manish Bhai, is here. And we have witnessed how vibrant he was in terms of GST publication last year. Under his guidance, we released around 9 or 10 publications of GST, and that is continuing. And we are really thankful for him for his continuous guidance and support in all the initiatives of WRC. Now I request Murtuza Bhai to please address all the participants.
Thank you, Yashwant. A very warm good afternoon to everyone. And at the outset, let me first thank the chairman of the GST committee at WIRC, CA Yashwant Kasar, and vice chairman of the GST committee, Gautam Lat, for organizing such a unique industry-specific series. So Yashwant Bhai, thank you very much for all the good work. We have embarked upon the GST series In the first part, we did 5 different industries, and today we are in the second part where again 5 different industries. And let me also thank CA Pratik Sampat. Pratik, thank you very much for joining us today and agreeing to share your knowledge with all the participants, Pratik. The whole litigation series, the GST series, and a lot of publication, we are always guided by our immediate past chairman, CA Manish Gadia. So Manish bhai, thank you for all the guidance, all the support that you provide to us throughout. For us, you are the GST guru. So thank you, and please keep supporting us as always. Let me also thank the coordinator for today, CA Ashita Shah. The coordinators also keep supporting WRC from time to time basis. Before I come to the publication, friends, the media and entertainment industry, again, so vast. And when you talk about the content, it can be a theatrical content, it can be a television content, it can be digital content. And when we talk about theatrical content, again, the first thing is when will the theatrical rights, whom do you sell to? Then again, like how does the ticket sale happen at the theaters? Then when do you sell the broadcasting rights? How do you sell the music rights? X, Y, and Z. There are so many different integrations and so many different revenue streams. And where to tax, what to tax, how to account is really very, very complicated, not that easy. Again, the broadcaster gives the various signals again of different channel, the input as we call, to the multi-system operator or the LCOs or the MSOs, and they in turn go and give to the individual customers. So really a vast area, and I'm sure Pratik will agree with me that to cover such, when you say media and entertainment industry, even 2 days will not be enough. Okay, but I'm sure Pratik is going to touch upon really some of the nuances today, which are very, very challenging, or which are like really creating a lot of sleepless night for all of us. And I'm sure whatever is left out also, we can do a lot more sessions as we go ahead. So, but one thing is important. Now today, every client talks about value addition. And when we talk about value addition, I'm sure we'll need to specialize in industry wise, whether it is real estate construction, whether it is hospitality, whether it is media entertainment. We'll have to understand the nuances and the problem in that industry, and we'll have to accordingly deliver the assignments or the value to our client. So happy learning to all of you. But before we go to that, like Yashwant Bhai mentioned, in the last year, while Manish Bhai was chairman, we released 8 GST publication. We released one more after the new team has taken over, and today is the 10th publication. And the architect behind all the 10 publications are CA Vikram Mehta, CA Rajiv Luthia, and CA Jinit Shah. So big round of applause for all of them. Thank you very much. Thank you, friends. And like we were discussing before going live, at WIRC, the people are such good. You just need to give a shout, and there are so many people who are ready to support. And this is the whole, the framework, the mechanism, the ecosystem which works so well. And that is the reason we are able to do so many things. The whole people who contribute to the publication is free of cost. People who come and speak is free of cost. There is no honorarium even. And people really spend their time and share knowledge. So thank you to all of them. Let me also, before I hand over back to Yashwant, thank CA Aman Haria for all the groundwork, and Advocate Vinay Jain for again the groundwork on this publication, which is activities or transactions which are not treated as service. So what is service, what is not service? Again, so much of litigation has started and is going to happen, and I'm sure on some of the matters it is going to go up to the apex, the Supreme Court, to decide whether it is or whether it is not. But the publication brings out in such detail, in such lucid manner, so many aspects of it. I'm sure everyone is going to benefit out of it. So without taking much time, over to Yashwant Bhai. Yashwant Bhai, we can first release the publication and then get started. So over to you. Thank you.
Yeah, thank you, Chairman sir. Friends, today we are going to publish the book of WRC on activities or transactions which are not regarded as supply, that is Schedule 3. And for this publication, The contributors are CA Aman Haria and Advocate Vinay Jain. Along with them, the coordinators who always there for supporting the initiatives of WRC and the publications are CA Rajiv Luthia sir, CA Vikram Mehta sir, and CA Jinit Shah. So on behalf of WRC and on behalf of all the members of WRC, I thank CA Rajiv, all these contributors and coordinators. Friends, now I request Advocate Vinay Jain to please address all the participants about this publication.
Thank you so much, sir. Thank you for, you can call me a CA also, because by heart I'm CA only.
Yeah.
So there's nothing offense about that. First and foremost, sir, many thanks for all the ICI dignitaries for giving us this opportunity. Because as a profession, we can contribute in so many manner, but this is what we feel that in a little, whatever little could have done, we have tried to give it to the, because our duty, not only this thing, our duty now to give it to the back to the profession also. So whatever little thing we are, we can contribute, we are trying our best to do the same. And first and foremost, very, you have given us this opportunity. We are very thankful for that, sir. And Mr. CA Aman Haria has done a lot of groundwork. He has immense effort he has put in the publication of this book. And as the subject, you know, the subject is a Schedule 3 transaction. As Sridharan sir says, a professional, a tax professional is only concerned with two things, because the client will be coming only whether exemption is available to me or not, or ITC. These are the most the thing that every profession, tax profession should be knowing that, because client is most interested in these two topics only. So from that perspective, the Schedule 3 becomes a very relevant topic, because it says what is taxable, what is not taxable. And we have tried to highlight very important aspect like employer-employee relationship, actionable claims, land and building. And as you see, there are a number of ARs everywhere. It is now disputes are going on. So we have tried our best to put in all the whatever judicial precedents is there, and we have tried to incorporate the foreign jurisprudence also, and also with our practical experience, whatever we have faced either in the service tax regime or in GST regime, we have tried to provide in a very lucid manner. So a person who is looking for any interpretation of Schedule 3, he should find this book in a very handy manner. He can look forward all the precedents and what are the interpretations were available. We tried to incorporate that, and we feel this will be a good help to all the professionals. And thank you so much for giving us this opportunity. Thank you, sir.
Thank you so much, Vinayji. As you rightly said, that where the client comes to the chartered accountants or professionals, one of the major area is whether it is taxable or not, whether I will be able to fall, or my transaction will be able to fall in the Schedule 3 list or not. So that is where our professionals must require some detailed and expert knowledge. And I'm sure with the efforts of both of you, the contributors, Vinayji and Amanji, and the coordinators, Rajiv sir, Vikram sir, and Jinit bhai, this publication came out really well, and it will really prove to be the knowledge enriching for all the members of WRC and beyond WRC as well. My appeal to all the members, participants present over here, do order this book on WRC website. It will be really value addition to your collection of books. Thanks again for your efforts and contribution in this endeavor of WRC publication. Thank you.
Thank you.
So friends, going forward, as our chairman sir Murtaza bhai rightly mentioned, if you want to understand or if you want to guide your clients on taxation matters, let's say on GST matters for a particular industry, you first know that industry inside out, and we must learn that how that business is functioning, what are the ways how are the operations, and where GST implication can be there, and how the tax planning, I would say, or how there can be better GST advice for that industry. So in this regard, for today's session on media and entertainment industry, we have a learned faculty, CA Pratik Sampat. He has given a very brief introduction of his. So only 2 or 3 liner introduction, but I would say his presentation will be quite elaborate and in detail because this, as Chairman Sir mentioned, this is a very big topic when it comes to media and entertainment industry. So CA Pratik Sampat is a director working in GST team of ENY and works in various organizations, works with various organizations in media and entertainment industry. He has experience of working on structuring, compliance, litigation, and representation aspects of GST issues in this media and entertainment industry. So thank you, Pratik ji, for accepting our invitation, for taking up this session for our members on behalf of WRC. And I request Pratik ji to please begin with his session.
Thank you. Thank you so much. Thanks for the introduction. Is my screen visible?
No.
Okay, just
At the bottom, there is this green button, share screen.
Share screen.
You have to click on that.
Yeah, now it's visible. Again gone.
again go. Okay, let me just. Visible now?
Yes.
Okay. Yeah. So good evening, everyone. So I'm Pratik Sampat, and like Yashwant mentioned, I've been working on the GST for the media entertainment sector, and I'll try and take all of us through the nuances which impact the media entertainment sector. Also touch upon certain business aspects and cover certain revenue streams. So like the chairman mentioned, the media industry is pretty broad when you talk about media entertainment both put together. So what I've done for today's session is try and cover 6 to 7 topics, and I've broken it up into different industries. We'll see how GST impacts all the industries. So the first one is the television industry. The next is the film, advertisement, OTT, gaming, sports, and NFT is something which is, I think, pretty emerging. While there could be still a discussion on whether NFT is media entertainment or technology, but we'll try and touch upon certain aspects on NFTs as well during today's session. So coming to television, first, the major revenue streams for any television company or anyone who's operating in the television space is distribution of TV channels, the sale of advertisement slots, and licensing of content. Now, when we see all these 3 major revenue streams, this generally contributes to around 90 to 95% of the total revenue that the television companies earn. The rate of GST on the distribution of TV channels is 18%. The GST rate on advertisement on TV channels is also 18%. Content licensing, which is in GST terms called as licensing of intellectual property rights, was liable to a GST rate of 12%, but now from October 2021, that is also made liable to a 18% tax. Now, before we go into say the technicalities, I thought I'll just explain how does the industry work. So generally, we have a channel company, the television channel company, which could be a Star, Sony, Z, Viacom, and we have n number of TV channels now which operate into India. There will be generally a distributor of the channel, and the distributor of a channel gets into a contract with a multi-system operator or a cable operator. Similarly, the channel distributor can get into a contract with a DTH service provider, and either of these two persons will have a contract with a subscriber, which will be an individual like you and me. So the TV channels that we see on our homes is either being provided to us by a DTH service provider or by a cable operator or a MSO who operates in our area. But ultimately, it is owned by a channel company. Now, while that is the channel company who relays the signals, the content which is appearing on the TV is not always owned by the channel company. It's not always prepared by the channel company, or it's not always made by the channel company. The content is generally licensed to the channel company, or the channel company gives makes the content or gets the content made on a work for hire basis from a program producer. So this particular portion is how the distribution revenue works. Now, if we come on the right side of the slide, this is how the advertising revenue works. The channel company generally knows various advertising agencies who in turn have connects with the advertisers who want to place their products on the television for advertisements. Now, the way the operations work and the way the revenues are earned, if an advertiser has a budget of, let's say, 100 rupees, it will approach the advertising agency to say that I have a budget of 100 rupees and I want to run particular ads on various channels. The advertising agency will suggest the advertiser on where to put the ads. And say, let's assume that the advertising agency decides that 100 rupee ad has to be placed on this particular channel company. The agency will retain a commission for himself and pass on the balance to the channel company. We'll talk more about this when we come to the advertising agency slide. So, having explained broadly what is the structure of the revenues from for a channel company, I'll just dwell down into what are the typical aspects that that the GST influences on the main two revenues, which is the distribution revenue and the advertisement revenue. Now, distribution revenue. Now, like I mentioned, the distribution revenue is something that the channel company earns from the multi-system operator, cable operator, or the DTH operator per subscriber. Now, while the revenue is earned per subscriber, from an operational standpoint, the channel company has various distribution offices or satellite offices which are spread across the country. Now, these offices are engaged in coordinating and having contracts with various cable operators, multi-system operators, and the DTH operators. Various roles are assigned to each individual and every location or every office across the country. These offices across the country book the orders and then pass on the orders to the head office of the channel company, and the head office could be either in Mumbai, it could be in Delhi, for South it could be in Chennai. There are various channels which operate from Bangalore, from Kerala, etc. While this is from the contracting standpoint, the actual broadcasting of the channel might not happen from the head office, because in most of the cases, the uplinking of the television channels is outsourced to an uplinking service provider. So there are very few uplinking service providers, but these uplinking service providers have uplinking facilities from where the channels are broadcasted and made available on the satellite. From the satellite, the channels are downloaded on IRD boxes, and I'll cover what is IRD boxes subsequently. So the uplinking facility is something which is not owned by the broadcaster, but that is something which the broadcaster pays a fee for. So while that is on how the broadcasting happens on the satellite, the invoices and the financial control is generally at the head office of all the broadcasters. Now, with this, what I've kind of tried and done is jot down what is the impact area and what are the key aspects that we need to know when it comes to the television business and especially the distribution revenue. Now, like all of us know from a GST standpoint, uh, we need to identify what is the location of the supplier when it comes to services. For goods, it is relatively easy to identify what is the so-called from location, which is the state from which the GST needs to be discharged. But when it comes to services, which are primarily intangible, it is very, very difficult to identify which location should raise the invoice to the customers. Now, GST for media entertainment is no different. Now, given that, like I just mentioned, that various offices are involved in a single transaction of getting a signal from the channel company to your and my homes, which is the relevant registration of the broadcaster which should raise the invoice. Now, there are various positions that have been adopted by various service providers in the broadcasting category, in the broadcasting industry. For some of the broadcasters, they do the billing from one location, and irrespective of wherever the customer is, wherever the sales office is, the billing happens from one location. Some broadcasters take a point of view that while I would have offices in say 20 states for the purpose of operations, but the billing happens only from 4 to 5 states, which are kind of regional hubs. Say one regional hub could be in Delhi, which could look at North India. One could be in Mumbai, which could look at the western side of the country, and so on and so forth. So this is a very, very important aspect to identify and determine, based on which the GST liability in each of the state gets finalized. On the rate of tax, the rate has been 18% throughout. Like we know, service tax was effectively 15% and it got raised to 18%. Where there is a slight confusion is on place of supply. Now, the place of supply, like all of us know, is determined based on the IGST rules or the IGST Act. And if we read only the section 12, which is the relevant section of the IGST Act to determine the place of supply for domestic transactions, it also touches upon a specific rule to say that if the services are in relation to broadcasting, then the place of supply has to be the location where the head end is located, or the operator is located, or the cable connection is there. But it also goes down to say in the residuary rule of section 12 that if we don't fall in any of the above rules, then the location of the recipient of services becomes the place of supply. Now, like I mentioned in the earlier slide, from a broadcaster standpoint, what he gives the services is a service to a MSO or a DTH company to further distribute the service to a consumer like you and me, which means that he doesn't provide any services in relation to a particular head end or a set-top box that all of us have at our homes. So generally, the place of supply that the broadcaster decides for its revenues on the distribution side is the location of his customer. So if his customer is based in a particular state, and say if I take an example of a broadcaster in Mumbai, if the broadcaster happens to be in Mumbai and if his customer happens to be in Gujarat, irrespective of whether the ultimate consumer of that signal could be in Rajasthan, the broadcaster in Mumbai will raise an invoice on the distributor or the MSO in Gujarat only and charge a IGST mentioning the place of supply as Gujarat. Similarly, when it comes to international subscription, where the channels have to be broadcasted outside India, The place of supply is the place of the recipient of the service. So if we have a company, let's say in Singapore, who wants to distribute the channel of an Indian company, and provided we get the relevant foreign exchange in time, the GST on that particular supply is zero rated, and generally the broadcaster claims that as an export of service under the GST law. While this is very simple on the revenue side, as an industry, and all of us would probably have faced this in the past, a lot of mergers and acquisition happen at the cable operator and the multi-system operator level, where certain relatively strong MSOs regularly acquire the cable operators. Now, when it comes to billing by the broadcaster, generally the billing happens at the start of the month for a particular cable operator, and say all the channels have a specific rate card agreed with the cable operator. So if I am a cable if I am a channel company, and if my premium service is my premium channel is viewed across the country, I would probably price that premium channel to be 15 rupees per customer. Now, I charge as a broadcaster, charges 15 rupees to the cable operator on a monthly basis per subscriber who is viewing my channel. But in various instances, the cable operator gets merged with another cable operator or a multi-system operator, because the merger acquisition in this kind of industry is very, very prevalent. The problems that the broadcasting industry generally face is that because I would have raised the invoice on a cable operator A, but ultimately the cable operator A got merged with cable operator B. The cable operator B is not entitled for the credit because the invoicing happened on A. And because B doesn't get the input tax credit, he generally doesn't pay the 18% to the broadcaster. So this becomes a challenge for the broadcaster. So a lot of broadcasters, and you'll see a lot of credit notes which get passed in the books of broadcasters, because they ultimately get to know that the recipient of my service was not A, but it is actually B. Provision of IRD boxes to the operator. Now, like all of us would know, when we watch TV at our homes, there is a set-top box which is available for us, right? Now, this set-top box is provided to us by our local cable operator or by the DTH operator. Like we as customers of a DTH service provider get the set-top boxes, similarly, the DTH service provider also gets a set-top box from the channel company. Those set-top boxes are called as IRD boxes, integrated receiver and decoder box. Now, as a supply to the DTH company, the channel company needs to give this box. Only then the DTH company can download the signal from the satellite. In the contract, it is specifically mentioned that the boxes will be given to the DTH operators or the MSOs or the cable operators. Now, there have been challenges in the past on whether the supply of this boxes is a distinct service or it is a part of the channel's licensing services that the broadcaster anyways is giving to the DTH operator. The challenge becomes more interesting given that the GST rate on the supply of IRD boxes is 28%. So while the distribution service is liable at 18%, if the transaction happens to be in the course of IRD boxes, then the GST rate becomes 28%. So it is one of the challenges that the industry faces to substantiate that the provision of these IRD boxes is a part of the overall service, and it's not a specific different supply that the channel company does to the IRD to the cable operator or the DTH company. So while the IRD boxes are once provided to the channel to the cable operator or a DTH company, there are a lot of movements which happen of these IRD boxes because of various reasons. Some cable operators would say that, okay, the boxes are not working, I need a replacement. Certain say the IRD boxes also have certain capability or capacity restraint. Certain IRD boxes can serve only specific number of customers. So if the cable operator happens to get more customers, he will need either another IRD box or he will need a replacement of the existing IRD box, which is a smaller one. And the higher version of the IRD box is called as PIRD, which is called as professional IRD box. Now, because of this business requirements, there are a lot of movements which happen of these IRD boxes. And these movements could happen across the country. As a broadcaster, because this movement, like I mentioned, this particular movement is not a part of this particular original supply. So because the subsequent movement is not a part of the original supply, there arises a question on whether the tax rate on this subsequent movement has to be considered as a part of the original supply, or this is a separate supply in itself. If this is a separate supply, then the rate of tax has to be 28%. The industry has taken a point of view that the subsequent supply, which happens after the first delivery of the IRD boxes to the cable operators, that is a separate supply, and in that kind of supply, the GST rate will be 28%. And like all of us know, if we charge a 28% tax, the within our group, within the same legal entity, the other GST registration gets the credit, so it doesn't become an additional cost, even if the rate is higher by 10%. Similar is the case when the boxes move for repair or replacement across the country. These boxes, while it move from one state to another, it's traditionally called as branch transfer, and branch transfer is something which is covered under the GST net, and the industry generally pays tax on these branch transfers as well. Moving on to what are the typical issues that we have in this particular distribution revenue for a broadcaster. The first and foremost is to decide where do I bill or where do I raise the invoice from to my customers. Given that various offices are involved, various locations are involved in a particular supply, and say the extreme example is that my uplinking facility, which is where the signals get pushed on the satellite itself, that could actually be in Singapore as well. So the location from where the signals are getting broadcasted is different. The location from where I am selling my services is different, and the location from where my customers are contracting with me are completely different. So identifying the relevant location of service provider is one of the issues that the industry struggles, and already the tax offices have started to evaluate this in detail, understand the operations in detail, and they have started to get a point of view on where should the broadcasting company bill from for its distribution revenue. Now, based on this decision, there is also likely a accumulation of input tax credit across India, because while your revenue could be in the head office or in the 4 regional offices based on the location, based on the area that the offices cover, but the expenses get incurred across the country. Now, once the expenses get incurred across the country, the accumulation happens across the country. So it becomes very, very important to have a right structure in place wherein a company does not have accumulation in one state and then pays out cash liability in other state. On the ISD and cross charges, which is again linked to this topic, whether a broadcasting company or any other company, whether they need to do a credit transfer using an ISD mechanism, or should there be a cross charge that should be put in place. And we've witnessed multiple advance rulings, appeal in the advance rulings, which are giving different point of views across the country. Now, with this complication, the industry also is kind of lacking clarity on what is the right way forward. On the IRD boxes, generally these IRD boxes traditionally were not being manufactured in India, and they had to be imported from outside India. Now, when the import happens, the IRD boxes were generally stored in one warehouse, which would be near to the port of import. But the need for the IRD boxes is across the country. So which again was leading to accumulation of GST credits. And say, for example, a lot of IRD boxes got shipped in the port in Hyderabad. If in that situation, all the credits were lying in the state of Telangana, but the liability was getting accrued across the country. So that also is one of the challenges which the industry faces and which needs to be structured properly. While this is on the advertising distribution side, I thought I'll cover the advertising revenue also, which is properly the significant revenue for any broadcaster. Now, similar to the distribution side, where you have multiple offices doing multiple roles, for advertising also, there are multiple offices of a single channel company or a single broadcaster who interacts with various customers. The various roles which are done by the advertising team of the broadcaster include the customer acquisition, contracting with the advertising agencies, the advertisers, negotiation of the deal, finalization of the deal, then putting the relevant things on the ERP portals, ERP systems. Like I mentioned, the broadcasting, the uplinking happens from a different uplinking center, which could be anywhere in the globe. With this particular fact pattern, the relevant points that we need to have a point of view on is who is the relevant service provider for the advertising service as well. Because all of us know, say, the same advertisement that we see in Mumbai would be available to be seen in Delhi also. Right? But the person who was advertising it could be based across the globe, across the country, and the person who's got the order for that advertisement on the particular channel could also be based across anywhere across the country. So deciding which location of the broadcaster has to bill becomes very, very important. The rate of tax on advertising services is 18%, and the place of supply, while the place of supply for normal B2B advertising is pretty simple, where it says recipient of service, but the place of supply for advertisement to government is a challenge, and it's really a pain. And I'll cover that particular aspect in the next slide. In advertising, there are a lot of barter transactions which happen. And when we say barter, barter is something where we exchange goods or services against goods or services, right, without any cash payouts. Now, because barter has a has specifically been included in the definition of supply, the process around the barter transactions have to be monitored very, very carefully. If either of the party in the barter transaction do not comply with the relevant provisions, it is likely to have additional cost in the entire transaction. So it becomes very critical to have the barter process in place if at all the organization has any barter policy. The best possible way is to raise invoices for barter transactions for a particular value, charge a tax, and probably in return get another invoice from your customers where he would have also charged a tax. So like I mentioned, I'll just go through the government ads. Now, while the place of supply for normal B2B ads is the location of the recipient of services, when it comes to advertisements which are provided to the government, the place of supply is very, very complex. What the law says, and there is a specific notification which was issued after the GST implementation. The notification suggests that when the advertisements are provided to the government, and this is not government entities, this is if we are providing services to the government of India or the relevant state government, the place of supply for that government will be the value which is attributable to each of the state in the country for that particular advertisement. Okay, so very, very simply put, if there is a say COVID vaccination campaign which is run by the government of India, and if the ads are put on a television channel, Now the ads are being viewed across the country in all the 36 states of the country, right? And the billing for that will be happening to the government of India from whoever is the broadcaster. Right? And the government of India has a specific agency called as DAVP, which monitors the advertisement spend of the government of India. Now, when the broadcaster will bill to the DAVP, the GST law says that if the value of that particular advertisement is 100 rupees, you need to break the 100 rupees into different states and charge the tax separately for all the states and mention the POS of each of the state when you do the invoicing. And the logic for dividing a single transaction into 36 states, which was given to the industry, was that because the government doesn't get any credit of the GST which is charged by the broadcaster or by anyone, each of the state wants the share of the GST which is attributable to the viewership in that particular state. So if on a particular TV channel, if a say COVID vaccination campaign ad is run, the broadcaster has to divide that 100 rupees into 36 states, and the proportion of that 36 states has to be decided by a BARC data report. BARC is a broadcast advertisement and research council, which we also otherwise know for the TRP ratings. TRP ratings is something that each program gets based on the viewership based on the viewership. The BARC gives out a report of which are the programs which are being viewed across the country the most. Similarly, the BARC gives a report of each channel on which state views this particular channel the most. Now, this BARC report is updated quarterly. So what the GST department or the law envisages and expects the broadcaster to do is that the 100 rupee ad has to be divided into 36 states, and the ratio of that 36 states has to be decided based on this BARC data. So if the BARC data says that a particular, say, channel number 1 is being, say, viewed in the state of Delhi the most, and say then in UP, then in Bihar, Jharkhand, Maharashtra, etc., then the 100 rupee has to be divided in that proportion, and the broadcaster has to issue 36 invoices with different place of supplies, then give those 36 invoices to the DAVP, and then recover the 100 rupees plus the 18% from the DAVP. While this is what the law is for television, the GST notification and the GST rules prescribe various bases for different kind of advertisements, and I'll just take a minute for us to go through each of these modes of advertisements. So when the ads to the government are run on TV, it has to be based on this BARC data. When the ads are run on the radio, then the radio station or the radio company has to determine which radio station pertains to which state and attribute a value to that state. Similarly, when the ads are given in publication, which is in newspapers, if the government of India chooses to give an ad in the newspapers, then the supplier of that service has to identify which state the circulation of that newspaper is going to be restricted to, attribute a value to that particular state, and charge a tax. When it comes to advertisements on hoardings, the law is suggesting that the location of the hoarding is something that you should take into picture. This is the most interesting one, advertisement on trains. So if someone was to place a Government of India ad on a running train, and let's assume we have an ad on a Rajdhani Express running from Mumbai Central to Delhi, now that Rajdhani Express goes from, if I can divide into states, it will pass through Maharashtra, Gujarat, Rajasthan, MP, and then reach Delhi. So what the law says that if the government of India puts an ad on the Rajdhani Express, okay, then a particular transaction of, let's say, 100 rupees has to be divided into all these states, and the proportion of that 100 rupees will be based on the area of the track in each of these states that the train is supposed to cover. Now, just imagine what complexity does it lead to when you are doing this advertisement to government. Similarly, when you come to the advertisement on the railway tickets, the law says that wherever the ticket has been issued, whichever state the ticket has been issued from, that becomes the place of supply for that transaction. When it comes to utility bills, the law says that you need to decide where is the address of the customer on which the utility bill is being issued, and that becomes the place of supply. Cinema halls, it says location of the cinema hall. When it comes to advertisement on the internet, and all of us know a lot of advertisements now happen on internet and on digital mediums, which could be on the websites, on the mobile phones, um, uh, on tablets and other smart devices. The law is suggesting that the service provider should go to the TRAI data, and the TRAI gives annual data of how many internet subscribers are there in each of the state. So each transaction of supply to the government of India or any of the state governments has to be divided into various states, and the proportion has to be based on the TRAI data, which is published on a yearly basis. Similarly, when the services are of advertisement to government through a SMS, the breakup has to be based on a different TRAI data, which gives the breakup of the number of subscribers in each state which have subscribed to the telecom services. So this is a very broad overview of what the advertisement to government looks like. So when it comes, so while I've discussed what are the broad impact areas, what are the main implications or what are the main issues from a GST standpoint? Like I think the first issue that we already discussed was where is the service being provided from? Similarly, for a broadcaster, he has to decide who is the recipient of his advertisement services. Is it the advertising agency or it is the particular advertiser? And I'll probably just go through that, the example here. The channel companies here, the advertiser, say, which could be, I'm just taking probably a Parle Agro example. Parle Agro wants to put an ad of Parle-G on a particular channel. So rather than approaching the channel, it goes to the advertising agency. And the advertising agency then approaches channel 1, channel 2, channel 3, everyone, and then the ad is run. Now, for the broadcaster, he knows the agency. While he will know that the ad is of Parle Agro, he doesn't get approached by Parle Agro directly. Now, with this pattern, who is the recipient of broadcaster's service becomes very important. And all of us know that if the recipient is not decided properly, the credit flow also gets hampered. So given that in the definition of recipient of services under section 2 subsection 93 of the CGST Act, it mentions that the recipient of service will be someone who is liable to make payment to the provider of services, and the recipient shall also include an agent of the recipient of the services. Okay, so with both these aspects, most of the industry, most of the broadcasters consider the advertising agency as their recipient of services, while the ultimate recipient of the service of the advertising services is say advertiser like a Parle Agro. The next question is whether the broadcaster can claim an export benefit or a zero rating benefit even if the ads are being viewed in India. Now, there are a lot of brands which might not be in India, which are yet to launch in India, but they have advertisement put on the broadcasters' television channels. Those advertisements are viewed in India, but the customers are located outside India. like we saw in the place of supply discussion, the place of supply for advertisement services is the location of the recipient. If the location of recipient is outside India, but the ad is being viewed in India, can we say that the export of service has happened and the zero rating benefit is available? While most of the broadcasters take a point of view and the industry takes a point of view that this is zero rating, but this is something which is likely to get challenged, and there will be traction on this. There will be precedents which support a particular point of view, but this is something that as professionals we should be aware of as a challenge which will arise on the advertising side. Bonus spots. Bonus spots is something that the broadcaster gives as a free transaction or as a free advertisement to its customers. Now, if I am a regular advertiser on a particular broadcasting company, say if I cross a threshold of, say, for example, 1,000 ad spots, I would get bonus, say 10 bonus ad spots to put my ads on. While I don't get charged for these bonus ad spots, does it mean that still the broadcaster needs to pay tax on that? If he doesn't need to pay tax on that, is there an impact on the ITC for the broadcaster? Is something that we need to ponder upon. And the last challenge that I thought I'll put on the slide is the operational challenge when it comes to the ads on the government or ad services, advertising services provided to the government of India or any of the state governments. We all saw that if we have to raise one invoice, the invoice has to be split into 36 states. While that is one aspect of which the broadcaster needs to do, the equally challenging aspect on the business side is to convince DAVPs and any other agencies of the government of India to make payment for 36 invoices, because they generally issue the RO, which is called the reveal order. They generally issue only single RO. Against that one single RO, there are 36 invoices. So that's another challenge that the industry faces when it comes to the advertisement side. I'll quickly move on to the next subsector that I thought I'll cover is the film side. Like I think, like our chairman earlier just pointed on that the film also is equally a complex structure, where a film producer gets services from a director, music director, lyricist, actor, production house, music studios, and agents. On the revenue side, it has generally the theatrical distribution and non-theatrical distribution. Now, what is theatrical distribution? So if I am a producer of a film, I will generally have two broad sources of revenue. One is that I would want to show the film in the theaters, which is physical way of or a way of viewing films when you go to a particular property, or I will give the non-theatrical distribution, which is where the customer can view the film not by going anywhere, but the film can be viewed on any other devices. What are the main aspects for this particular distribution or the film sector? Theatrical distribution liable to GST, but this was not liable before GST got introduced. There were specific exemptions given under the service tax and the VAT law when it came to theatrical distribution. But at the same time, under the earlier law, the tickets were liable to an entertainment tax, which is no more there under the GST law. On the non-theatrical side, which is satellite distribution or airline rights or music rights or OTT rights, generally there was service tax and VAT both getting issued or being levied before the GST, which was more or less coming to a effective tax rate of 21%, which has now come down to a 18% tax when it comes to the non-theatrical side. What is the place of supply for these services? Now, the place of supply generally is recipient based, but the challenge happens where the intellectual property rights, which is the film copyright, that gets transferred on a perpetual basis. Now, this is a pretty interesting one. if we read the rate notifications, the service notification, and the goods notification, the service notification, especially the HSN 9973, it talks about temporary transfer or permitting of use of any intellectual property rights in particular goods. The rate of tax earlier mentioned was 12%, which got increased to 18%. But similar entry also has been mentioned under the rate notification of the for the goods, where the HSN has been kept empty, but the goods notification says that perpetual transfer of IPR will be liable to tax under the goods notification as well. Now, what it appears to be that the GST law itself is not very clear in terms of whether the perpetual transfer of IPR should it be considered as goods or should it be considered as services. The important aspect here is that, say, even if it is considered as goods or services, the rate of tax remains the same. Our customers will still continue to get credit. The question becomes very important when it comes to a cross-border transaction. If it is a service, then the place of supply for services is where the recipient of service is located. But when it happens to be goods, the zero rating benefit is available only if the goods have crossed the custom frontiers of India. Now, all of us know for intangibles or IPRs like a film copyright, you don't actually need to export anything tangibly, or nothing has to cross the custom frontiers of India. Or if I say procedurally, there is no shipping bill that you need to file for export of intellectual property rights if you have your customers outside India. If you don't file a shipping bill, or if you don't have anything moving out of the country, how will you prove that the goods have been exported outside India? And if you don't prove that, then we have an exposure, or our zero rating will be something which will be challenged by the tax authorities. This is something which remains to be an open area for the entire industry, and a lot of representations have happened on this. There have been certain tweaks in the law, but there is no certainty on what is the tax authority or the tax law wanting to tax. While on the film, for the film producer, the licensing of his content is, of course, the main revenue, but there is also something called as in-film placement that they earn revenue from. All of us would have seen a lot of movies, and you would have realized that there are specific brands that get talked about in the movies. So if I give a name of probably a relatively old movie now, but say Maricom. In Maricom, you could actually see a lot of hoardings of Usha fans, Iodex, and various other brands being called out. Now, when these brands are getting called out in the film, the production houses actually charge a fee for to these brands, which is called as in-film placement. Now, in-film placement is something again which is liable to a GST. While this in-film placement is liable to 18% tax, you would have also seen that, say, in those kind of movies, when the lead actor talks about particular brand, at the time of release of the movie, the brand also comes up with a commercial or with an advertisement which has the lead actor in it, okay? Which seems to be in the nature of barter. Now, if that is a barter, then like we discussed in the earlier slide, the barter needs to be valued and the tax has to be paid appropriately. The rate of GST on film licensing is now 18%, but before October 21, the rate was still 12%. So there was a concessional rate of GST which was made available to licensing of any IPRs of up to 12%. When it comes to the last leg in the film supply chain, which is people like you and me who will go to the theaters and watch the movie, the GST rate was brought down. Initially, the rate was pretty high. It subsequently, after a specific representation and after the industry leaders met the PM of the country also, the rates were brought down, and now the current GST rates is 12% if the ticket value is up to 100 rupees and 18% if the value is beyond 100. Well, that's the implication of the GST on the film side. What's the challenges or the open questions for the film sector still remain to be the first one, which we talked about, was perpetual transfer of IP, whether it's goods or services. Inverted duty structure for the past. Now, in the past and till recent past, October 21, the GST rate on film licensing was 12%, but all the expenses were getting incurred at 18%, which was leading to inverted duty structure for the film sector or any content licensing sector. Now, inverted duty has been allowed as a refund, but it's been allowed only for the purpose of goods, and there is nothing which talks about inverted duty refund being allowed for provider of services. So that used to lead to a lot of blockage of credits for the film licensors, especially because of the rate arbitrage. While the rate of tax on licensing was 12%, but in the entire film supply chain, the producers generally do not get into contract with the theater owners directly. They also have distributors in between. If the distributors are there in between, the industry point of view was that the licensing happens from the producer to the distributor, and the distributor then further licenses it to the theater. But the tax authorities seem to have a different point of view, where they alleged, and there were some circulars which were issued by the GST authorities to say that the distributors are actually providing a different service and there is no licensing involved, because of which the rate of tax on the distributors has to be 18%, even though the underlying film was being taxed at only 12%. That's something that all of us should know as professionals on the who practicing on the GST side, in terms of what is the classification of the services that our clients are doing. Last but not the least, the challenge on the ITC side is that, like all of us know, that the shoots of films happen across the country. There are scenic locations across the country, and we all hear that for shoot of a particular film, a particular camp was set up in a particular state or a city, and those scenic locations have been captured in a particular film. But not necessarily that the production house or the producer has GST registration in that state. If that happens to be the case, all the expenses which are locally incurred in that particular state becomes and the GST on that becomes an additional cost, because you can't claim credit if you're not registered in that particular state. Similarly, because of the very nature of the industry, there is good amount of cost incurred on beauty treatment services, makeup man, hairstylist. All these services are disallowed as input tax credit under the section 17(5) of the CGST Act. So this leads to an additional cost to the film sector, and these costs, which are genuinely needed for the business to run, those costs are also not allowed when it comes to ITC. I'll move on to the advertising industry. The advertising industry broadly can be broken up into two parts. One could be the media placement industry, other could be the creative or the PR industries. Media industry, media placement advertising agencies are something which deal with planning of media, media spends, activation of new brand launches, facilitating discussion between the advertiser and the broadcaster. Similarly, on the creative side, creative and the PR agencies, these agencies are someone who approach clients, which are more or less the advertisers, understand what does the advertiser need for creating a particular ad film or ad content, and then ultimately deliver the ad film or ad content to the advertiser. Now, like broadcasters, the media agencies also have various locations across the country, and they also approach various clients across the country, and then their roles are also divided across the country. The major aspects that we should know from the advertising agency standpoint is the first challenge, which remains to be for the service company, of where do I decide that the services have been provided from. The GST rate on advertising generally is at 18% when it comes to advertisement on television, internet, or any other hoardings or any other media. But when it comes to the print media, the advertisement is at 5%. The role of advertising agency, like we discussed in the earlier paragraph or earlier portion when we were talking about broadcasting, the broadcasters thinks that the recipient of service is the media agency. Given this, the media agency is, while media agency is supposed to be receiver of services, it also is a provider of advertising services to its customers. However, it also charges a commission for acting as this particular facilitator. Now, whether this commission is something which is an intermediary is again probably a question that we'll discuss. When it comes to place of supply, the place of supply for generally the advertisement services is the location of the recipient. The place of supply for government ads is the complex structure that we discussed earlier. But what is the place of supply for intermediary? Whether the advertising agency is an intermediary, because he is the person who kind of facilitates and ensures that the transaction happens between the broadcaster and the particular advertiser who wants to put the ad on the broadcaster's channel. On the issues that the agency is likely to face is, can the agency claim a 0 rating? Okay. The place of supply, like we mentioned, for media services is the recipient location, but the place of supply for intermediary is the location of the supplier. So if the agency is an intermediary, can he claim an export benefit? If he can't claim an export benefit, can he claim an export on the media value but not on his commission? That is something that we need to ponder upon. Place of supply for outdoor advertising. Now, outdoor advertising is, say, a simple example of that is advertisement on hoardings. All of us see hoardings across the road on railway stations, airports, and you have these big hoardings. Now, whether the place of supply for this advertisement on hoardings is the location of the customer, or is it the location of the hoarding? We have a specific rule under IGST law which says that if the service is related to a specific immovable property, then the place of supply has to be the state in which the property is located. So whether the services of outdoor advertising, is it related to that immovable property or it is the advertising services, is a question. Determination of a from location is what we discussed. Treatment of volume discounts. Now, volume discounts is something that the advertising agency generally receives from the media companies. And this is a discount which is passed on by the media companies to the advertising agency, because the advertising agency will cross a particular threshold of advertisement placement on that particular agency, on that particular media company. While these volume discounts are generally given, but the settlement of these volume discounts, the ascertainment of the volume discount pretty much happens after the end of September of the following year. Now, we all know that there is a specific embargo in the GST law that if you have to issue a credit note and if you have to reduce your liabilities, then the credit note has to be issued till a particular date. Now, the volume discount settlements or the determination of volume discount happens only after that particular date, which causes an issue for the advertising agency when it has to give adjustments in its books of accounts on the GST side on the volume discounts, whether this volume discount benefit will be available to them even if the volume discounts are decided after September. Next, I thought I'll cover is the OTT side of the business. Now, OTT is generally over-the-top platforms. All of us probably use it in some way or the other. So it's a platform available for accessing content for a fee. In various platforms, you don't get charged for a fee and you get content for free. The subscriptions are accessible on web portals, mobile apps, or any other smart devices. Some of the OTT, or probably most of the OTT platforms, also have advertisements on them. The customers or subscribers can avail the services of the OTT platforms across the country, across the globe, and anytime, any day, any time of the day. And essentially the way the services are provided are fully kind of automated, where you don't need any person to talk to you, to compel you, or to help you in starting to access the services. With this background, the registration, again, the location, where do I provide the services? Because like I mentioned, the services are completely automated. If people like you and me subscribe to any of the OTT platforms, we don't care where their offices are located. We don't even probably know or check whether they are registered in India or whether they are not in India. Having said that, what will be the location from where they should be billing? Now, like I mentioned, for a broadcaster, the uplinking could happen from a completely different location, which might not be in India. Similarly, for an OTT platform, the technology or the server could be anywhere on the globe. For all you know, the server, everything could be on the cloud as well. If that's the case, from where is the service being located, provided is a challenge. That's some that everyone needs to know. The rate of tax on the OTT platform services is generally the 18% general rate. The place of supply for OTT kind of services is the location of the recipient if the address on record is available with the supply of services. If the address is not available, then the location of the service provider becomes the place of supply. Like all of us subscribe to these platforms or OTT apps, these apps are available on various platforms like say Android Play Store or iPhone Marketplace. If that's the case, who's liable to pay the tax for the subscription? Is it the OTT platform owner, or it is the marketplaces like Android or the Apple? For overseas OTT platforms, there is a specific provision under the GST law, which is the short form being OIDAR. The GST law has prescribed that if the platform is outside India and if the services are being provided to an Indian consumer, then the overseas platform should get registered in India and start paying taxes in India. And from a GST law and administration point of view, there is a specific wing in the GST administration which looks at this particular OIDAR and the taxability of these OIDAR subscriptions and focus on these OIDAR service providers across the globe. What could be the issues for the OTT platforms? Determination of the customer location. Now, I might be sitting in Mumbai today, but I might be traveling to Delhi tomorrow. Now, if I am sitting in Mumbai today and watching a particular content on a particular app, and I continue to watch the same content tomorrow when I am in Delhi, whether the tax needs to be split between Bombay and Delhi. Okay. Similarly, there are various technologies available to find out where is my location, the subscriber's location. So what the OTT platforms generally struggle in is they need to make a choice of whether they will ask the customer where he is, or they will outsource the determination aspect to some other service provider who can decide or who can determine my location. Because as a consumer, I don't want to have too many clicks on the app, right? I would want to start subscribing to the services very, very fast. That's where the business challenge also comes in, whether the OTT platform should ask the customer to key in the state, or they should have someone else to decide what is my location. For Indian OTT players, while we just discussed the OIDAR thing, the OIDAR provision also says that if the platforms, OTT service providers are outside India, but those service providers provide the service through a marketplace again outside India, then those marketplaces are liable to tax. But what happens when the Indian OTT platforms provide those services through a marketplace? For example, if an Indian OTT platform, content OTT platform, hosts its app on say Android, which is outside India, whether and the customer is in India, whether Android should pay tax or the Indian OTT platform should pay tax. This is something that needs a bit of an evaluation. There are positions which have been taken by OTT platforms and which can be evaluated in detail. Will the OTT platforms be able to claim a zero rating even if the customers are in India? So similarly, similar to what we saw in advertising, whether the platforms or OTT platforms who have content licensing and content subscription services available, whether they can claim the zero rating even if the content is actually being viewed in India. For OTT platforms which are outside India, wherever the Indian vendors charge them any GST, that becomes an additional cost, which is more of a GST cost in the business. May not be a compliance cost, but it's a GST cost of doing the business in India. I'll move on to the gaming side, and this has been a topic of discussion of late in a lot of forums. Gaming, and especially online gaming, is something that enable customers to play games using the internet. The games could again be broadly divided into real money gamings and recreational gaming. Real money gaming is something where the user or the subscriber has to pay or kind of put in some money for playing the games. And I'm not talking about the subscription services, subscription that the customer needs to pay. The real money gaming is where the customer pays some money in a hope that he'll get some money in return. And recreational gaming is something that the customer plays for joy, and there are various games available for both the kind of games that I talk about. These games are available on web portals, mobile applications, or any smart devices, and it could be single player games, multiplayer games. These games could be based on particular events, or it could just be fun games. Like say, there could be games which are based on various sporting events which are happening or likely to happen in the future, or it could just be a game that one wants to play for having fun. The major issue or the impact or the major questions are rather, what is the rate of tax that applies on online gaming? Like all of us know that there is a specific rate of tax which applies on betting and gambling, which is 28%. But the rate of tax on normal gaming is 18%. Now, whether the real money gaming or the recreational gaming are something which are betting or gambling, the judicial precedents and the High Courts and the Supreme Court, in fact, have also mentioned that some of the real money gamings are not betting or gambling, they are games of skill, and hence the GST rate or the GST liability should not apply on the entire amount and not at all apply on the 18%. The place of supply for gaming is similar to the OTT platforms. If the gaming company has the location of the recipient, then the location of the recipient becomes the place of supply. If the recipient location is not available, then the location of the supplier becomes the place of supply. Or for gaming platforms which are made available through the marketplaces, the question arises on who should be paying the GST. Because like we had the GST, the OIDAR provisions, those OIDAR provisions could also apply to gaming companies. I think the last bullet on this is pretty important on what is the value on which tax needs to be paid. So for a real money gaming, I as a subscriber probably have to pay 100 rupees to play a game. And like me, there could be say 5 other people who are paying those 100 rupees. So total value that the gaming company gets is say 100 from me and 500 from others, which is total 600 rupees. After retaining its own commission or a platform fee, the gaming company distributes the balance amount amongst all six of us. Now, when it comes to the GST law, the question is, what is the value on which GST needs to be paid? And what is the service that the gaming company is providing? The question that has been, or the answer which is been there in public domain based on the judicial precedents, is that the gaming company only provides the platform, okay, where it charges a particular fee or a commission. So out of the 600 rupees that the company collected, 15 to 20% is retained by them, and the balance is then again redistributed based on the winnings and based on the outcome of certain events. So the challenge is whether the gaming company should pay tax on the 600 rupees, or it has to pay tax only on the 20 rupees that it is going to retain. Similarly, what is the GST rate on the value on which tax needs to be paid? The issues that I broadly mentioned about these issues was whether the gaming is akin to a betting or a gambling, what is the value of service, the rate of GST, and the GOM. So I'll probably just spend half a minute because of so many complications on this gaming sector. The GST Council had formed a, a group of ministers to give a report on what should be the answers to the question of the rate of tax, value of tax, etc. So in the past GST Council meeting, the finance minister also mentioned that this particular aspect was deliberated, and the chief minister or the finance minister of Goa wanted to revisit their point of view when it came to the GOM. And the decision of the GOM is likely to be made available in public anytime now. So the sense that or the kind of the likely outcome of the GOM, which probably will be incorporated by the GST Council in the GST law, seems to be that everything might be taxed at a 28% GST, irrespective of whether it's a fund-based gaming or it is a real money gaming. If that has to happen, so while that will be made applicable from a particular date, what will happen for all the issues for the past remains to be seen. I'll move on to the sports and the event side of the sector. The generally the sports and event sector has a lot of players, which include the sports boards, the league owners, franchise players, event companies, sponsors, stadiums. The boards or the league owners generally organize the events and the sporting and the sporting events. The franchise teams form the actual players or actual teams who play the events and incur all the operational costs. The ticketing generally is done by the franchise or the board, depending on the specific structures of the events. The core sports activities, which are notified and which had the backing of the government of India, has generally been given a lot of benefits under the GST law. With this background, I thought I'll probably just draw a structure of what is generally the structure for any sporting event which happens across the globe, or probably in India, if I can restrict it to right now. There is either a principal body outside India, or there is a body in India who owns a particular event, and this is more towards a sport event. Now, this particular body has 3-4 revenue streams, and which could be, one is the broadcasting rights, or say in today's day and age, digital rights. This company also earns the franchise fee and also has sponsorship and advertisement revenues. It also gives out sponsor rights, arena rights, ticket sales rights, and vending rights to the teams who play in the events. Okay, so say if we talk about the biggest sporting league, IPL, now these first 3 are considered to be central rights. These 4 are considered to be the team rights. Okay? And the central rights are something which is owned by the central body. And the team rights are something which is owned by the state particular franchise. I'll just run through what is the GST aspect on these particular sector. Now, the rate of tax on most of the revenues across the sector is 18 to 28%. and the 28% tax is on the entry tickets for the IPL if the tickets are beyond 500 rupees. The place of supply for events is generally where the if the ticket is event based, then generally the place of supply is where the event is located or where the event is held. For other services, generally the place of supply is the location of the recipient when it comes to B2B transactions. Sponsorship is one of the major revenue streams for this entire gaming and the event sector. While sponsorship services are liable to tax, but when the sponsorship services are provided to corporates, the GST is to be paid under an RCM mechanism, where the corporates will have to pay the tax under the reverse charge mechanism in cash and then claim the credit of that in their returns. Players, physios, and generally all the service providers in the entire sector are liable to tax. There are a few exceptions, like I mentioned, that core services of players, if they are playing for recognized sporting bodies, those players have been exempted from GST. For events and sport bodies, because these events and sports events happen across the globe, across the country, with multiple states, there is a need for multiple registrations under GST. And with multiple registrations, the blockages also happen across the country. There is also a concept of casual taxable person or a casual registration which is allowed under the GST law, where if you are not a normal resident of a particular state, but if you're going into that state and if you're doing certain activity, you can get a temporary registration for a period of 3 months if you pay the taxes in advance. And then once your event is over, you surrender the registration. So a good amount of companies in this event business also take those particular casual taxable person registration in the states where they actually don't belong to, do the compliances, and once the event is done, they will come out of the GST net from that particular state. While those are the implications on the issues, the biggest and the foremost issue is the taxability of sponsorship under the reverse charge mechanism. Now, sponsorship services generally amount to 40 to 50% of the entire revenue when it comes to this entity for the event business, and also to an extent the sport business. On such a major revenue, the GST liability is cast upon a reverse charge mechanism. So if I am a provider of sponsorship services, even though the services are liable to tax, I don't have to pay the tax. On the other hand, I need to reverse the input tax credit also, because these services are considered to be exempt services for the purpose of the rule 4243 under the GST, under the CGST rules. So this is a double whammy where I don't collect the tax, I don't pay the tax. The service is taxable, but still I need to reverse my input tax credit. That continues to be a big issue for the entire sector, and lot of representations are happening on this aspect as well. The other big problem is the extreme GST rates. While the tickets up to 500 rupees are not liable to any GST, but anything beyond 500 rupees is directly liable to a 28% GST. Similarly, the multiple registrations under the GST law causes a problem because the event industry goes from one state to another very regularly. The last one is something which has come up, and there is a specific ruling which is kind of creating issues now, is taxability of complimentary tickets. Now, in the event business or in the sports business, issuing of complimentary free tickets is a very regular phenomena, where if I am the owner of an event, I would, if my capacity of my stadium is, let's say, 100 tickets, while I sell, say, 80 tickets, the 20 tickets are with me, and I give it to a lot of my vendors, my customers, sponsors, government officials, etc. The ruling which has come out in the last a month or so seems to suggest that if you have issued a complimentary ticket to anyone, and if you're not paying taxes on that, the input tax credit also needs to be reversed. Now, this again, like the sponsorship issue, this is going to create a lot of havoc within the industry, where these complimentary tickets are generally treated as marketing expenses in the books. But because of these marketing spends, I will still need to reverse the input tax credit. While I need to reverse the input tax credit, what is the basis of that reversal is not known to anyone. So that's going to be a challenge. Coming to the last sector that I thought I should cover is the NFTs. And this is probably pretty niche right now and pretty early to talk about also. But I'll still, I think, talk about it. Now, NFT is the full form, of course, of NFT is non-fungible token. There is right now no legislation in India which defines what is non-fungible token. The only reference that we have is in the Finance Act, which is passed now when it comes to the income tax legislation, where they've said that non-fungible token will mean such assets as the central government will notify, and there has been no notification as on date. But necessarily, NFT is something which is a cryptographic asset on a blockchain technology and which has unique identification codes. Okay? It cannot be traded or exchanged at equivalency, and it is different from a fungible token like a cryptocurrency. Now, cryptocurrency, we can exchange cryptocurrencies, but NFTs are specific to a particular image or a particular music clip or a video clip. NFT resides on a blockchain technology, and the transfer also is generally on the blockchain technology. A person can buy NFT through cryptocurrency, and now there are various models which allow a user to buy using a fiat currency as well. But traditionally, NFT is designed to be bought only using a cryptocurrency. Buyers will generally have limited non-commercial rights, which means that they can't exploit the NFT because they are not the owner of the underlying copyright, but they can still resell that particular NFT. Now, if I can put some example to it, say if I am a particular celebrity and I have a big film, which I have a very super hit film in the past, I would put that poster of that film as an NFT. So what it means is that the poster of the film remains with me, but I made a copy of that poster. And let's say I made 50 copies of a poster. The 50 copies are available for 50 different people to buy. Now, those 50 different people will be called as the owner of that particular copy of the original poster. So, to an extent, it's a copyright, but it's a copy of a copyright which is made available to a particular owner of an NFT. Now, if I am an NFT holder, I can either keep the NFT with me, I can also auction it on various platforms, or I can transfer it to further someone else. There are various evolving business models in the NFT world as well, where there are various participants. One is the owner of the original copyright, which will be, say, the celebrity. One will be a platform who will make a lot of transactions possible. There is an entire world of blockchain which is making the transactions possible. There could be transferees who will now want to be the owners of the particular NFT. And the most interesting aspect in this is that no one knows where the other person is, because everyone is identified by a particular code. And because everything happens on a blockchain technology, there is no barring of any borders. Now, with this particular evolving industry and the evolving nature of this particular business and transactions, I just kind of thought I'll put out 2-3 open issues, and we know that the government of India is also not the GST department, and the council has also not formed a point of view on taxability of NFTs. The core issue remains to be whether these NFTs are going to be made liable to tax. If yes, whether they are supposed to be classified as goods or services. And if, say, it is either of the two, because they are to be transacted against a cryptocurrency, and the cryptocurrency is not something that you value in INR, then how will you value the transactions in NFTs? While valuation is one concept, the what is going to be the obligation on the platforms who are making these transactions available? Will the concept of TCS, which is pretty prevalent in the GST legislation now in the last 4 years, where the platforms, e-commerce platforms, are required to deduct or pay 1% TCS as a GST TCS. Given that the transactions in NFT will happen through these platforms, whether the platforms will be required to register for the GST TCS purpose, and if that happens, will individuals like you and me will be required to register for the purpose of GST, because the transactions in NFTs are pretty much high volume or high value transactions, and there are pretty much chances that people who deal in NFTs will be easily crossing the threshold limits. So with this, I come to the end of the presentation and kind of come to the end of what I wanted to present. Yeah. So back to you, Yashwinji.
Mishra ji, hi. Mishra ji, do we have any questions?
नहीं मैडम अभी क्वेश्चन नहीं है.
Okay. Any questions from participants? Okay. Sir, you have covered the topic so lucidly that the doubts of people have already been solved. So I think there are no questions. So it's on behalf of WIRC, it is my proud privilege to give a hearty vote of thanks. Sir, please accept our heartfelt gratitude for sparing your valuable time and giving such an exhaustive presentation, practically taking everything and giving live examples. The way you have taken up the sessions, that our participants have no doubts and queries. Thank you very much, sir. Thank you.
Thank you, Ashita. Thanks so much.
Thank
Thank
you.
you. Bye.